Hey, beautiful people, how are you? Yes, it's the Market Sniper. FX. Wow, 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 wow. FX is the game. It is indeed. Emerging FX. This has been part of our call for a while, and it has been motoring. And it's the thing that no one's talking about. It's all coronavirus. It's all crypto and Bitcoin selling off. It's all the market, the Dow Jones selling off on this and all of that. Good luck with shorting that. They announce interest rate cuts, they announce repo, more repo money, QE, etc. You can have a pump, you can get whiplashed. Yes, it's overvalued. Yes, at some point it'll keep spilling, but it's a monster to try trade to get right. The big story that could be much more one-sided and far less emotional with the whiplash is the emerging FX. And in actual fact, if you were with us on our non-farm payroll over here with the spinning tops, the tiny whiny little spinning tops over here that we have in place, you would have noticed that in actual fact there was a little bit of central bank intervention at the 5.98.5 over here. They'd resisted here, they'd resisted all the way along here, and they clearly didn't wish, as you could see before over here. They'd also attempted, let me get my little bit of a drawing going on, freehand maybe. Let's see if we can do a drawing. Freehand, let's do rectangles. You could see that they'd resisted there, they'd resisted here, the USD Turkish lira, and I think this is central bank. Do I know that for sure? I do not. I am speculating because we saw this in the Euro Swiss franc, not once but twice. In 2009, that led to the original Greek crisis, in the peg fail, etc., etc. And then afterwards they came out and said, even though they were already intervening, at some point we may choose to intervene to try scare people out. In fact, they were already in there like donkeys doing their damnedest. Over here you can see again there was a key level broken subsequently with momentum, then became support, and then broken to the downside with momentum. You can see the relevance of that. So on that non-farm payroll with my whole premium community, we went long the USD try. And since then, it has been going swimmingly on the USD try side. However, what many people didn't realize, for those that missed the trade, you had a later option entry because the dollar was strong during a period that the euro was actually quite weak. The euro probably deserves to be weak. They all deserve to be weak, but the dollar is the global currency of the world. There will be a dollar milkshake event, and the first to fail, as I've always said, in the circle of currencies, you fail from the periphery inwards, where the dollar is the king in the middle. It's kind of like the medieval castle. All the peasants and the low status people were outside the walls and just camped and tented outside the walls. They're the first to be massacred by the barbarian horde, and then they've got to come through the walls, and then there were castles within castles with walls, the most protected area being the middle where the king stood. So you collapse from the periphery in, same as the Roman Empire, same as everything. The weakest fall first, and that's where we are with dollar denominated debt. Turkish lira, one of the highest per GDP dollar denominated debt. So that's what you hear and learn from us, and that was why we were in on it. Look how many points you've left behind by not being in part of our premium community. Get the links below for a call if you want. Let's show you Euro try to show you what we've been doing. It's been a great trading period. Major advances made with high rewards and very tight risk that allows you to get scaled big. That's right, guys. It allows you to get scaled properly large. Okay, let's have a look at the Euro try. You can see some annotations that I've put on there. In fact, you had a squeeze within a squeeze. Let's show you the bigger picture on Euro try. Of course, I didn't do that on the dollar, but you had the absolute mooning period over there, which was absolute melt up. So you shot up, and then of course you had a little bit of sobriety return. Markets always overreact, and now you then got this additional little squeeze right over here, where you can see, let's see, what are we going to draw with? We'll go with the little rectangle thing again across here. Oh, we're putting on the normal lines again there. That little additional squeeze. That's a bizarre shape to have used. But you can see the squeeze within the squeeze that keeps giving you the gift that keeps on giving. And of course, we've made a number of interim targets, as you probably see. That's why we're having a little mini pullback right now, potentially. So there could be a small pullback, but generally it's very hard to put the genie back in the box once you've let it run. It's very, very hard. So that's the Euro try. This was the first one that clearly was showing signs of weakness. As I say, we're going to have a pause, but for me, it's tough. with emergings. Once people start looking at emergings and the first wave and signs of the seams bursting on the football have occurred, it's kind of like a Ford Bronco. You don't, once it's started, you left the handbrake off and it's falling down the mountain, it's not an easy thing to stop halfway. Once that genie gets out the bottle, the only way it stops is when it's smashed up at the bottom of the valley. It's not an easy one to put back in the bottle. So yes, you may get a pullback. It's there for you as a gift. This is my offering YouTube. I'm just giving you an idea of what we've been doing. You could earn your way into our premium community and be in on this from the beginning, on the pullback of these trades, getting back into the long side. That's not advice. This is entertainment. This is my view being shared only. We are non-advisory. Please take note. What else? What about the others? Well, I'll just start off with a more eclectic one that's difficult to find to trade. Brazilian real. This is what's happening in the world right now, guys. It's the most unspoken of thing that's going on out there. You know, you've got a rising wedge that is going into a rising wedge with a melt up to the upside. That's pretty much how it's rolling at the moment. I mean, I can draw it for you. There you go. Cross the tops, cross the bottoms. We're the only ones who splits down the center because we have real reasons for that. As I say, learn more about why we do that on a program, but you can see there's even a tighter rising one coming like that. I can do it in a different color, in red, and you're getting a real melt up across there, and that is going to moon shoot. But it's not an easy one for you to find a broker to trade with, but it is confirmatory of the position the global world is finding and who gets hit first with this economic slowdown when supply chains get stopped for whatever reason. It might be a fake reason, it might be partially valid reason, it might be an overstated reason, it might be understated reason with this virus, but the point is economic activity stops, and who does it hit first? The weakest. It's always like that. When the economy stops, the poor get thrown on the street, not the rich. Although it can affect everybody, it doesn't always. So that's the USD Brazilian real. What about ones you could trade? Well, we spoke of the Mexican. Yes, we were out Mexico way. And this is the macro. So this is the trade that got away for me. I was supersized here. Thought I had a little primer on it a number of years ago. Failed due to oversizing. Take a message from the wise. I mentioned this also to my premium guys a while back. That was the one that got away. I went super long, heavy. I was at a hedge fund. I was leveraged super long at this point, expecting it to moon and make my target and overperform. And in actual fact, it broke and I was feeling all good, and I added, and I was at maximum size that I could do. It paused. The dollar took some of its steam out of the wing. I had it as the high 3 over here and the low 3 down here. It pulled back and made a new funnel, and then it went. I was shaken out in the down leg here because of sizing. I was too aggressive and too big. And then it did, wait for it, a massive hunt volatility trumpet as it made the target at this point and then went into further blow off. Absolutely, that big fish that got away from me. I ate red when I could have had mega green. It would have been a couple of million. That one I was supersized with the benefit of the leverage of an institution behind me, or an arrangement, let's just put it that way. So what, don't do it. It's coming, but there's always a little trick. It's always, you know, the markets are straightforward, but then they're not. So what are we talking about here? Well, we think this is going to be a structure as well. So you can get in on this one. You've just had what we call a look one way candle, trade up the other way. That's a major reversal in down. This period over here actually has been quite benign for the peso. It's a big, long, extended second impulse. It had a grind line under it. The peso wasn't looking weak to the dollar. And in fact, it broke that grind line, traded down in a channel, and then reversed out of that channel. And that is the beginning of the end of the strength. I did that box a few days ago, and now it's outgrown that box and needs a little bit of extra skyscraper room. Isn't that funny? So that's what's happening on the peso. You can drop down into it and have a little look on a closer view. You can see that channel being properly broken over here. It's very powerful, and it's been properly broken, I can tell you, and that's a big move. So how are we trading it? How could you break into these trades? We'll explain more in our premium area with our Looms videos, updates, webinars, and our day-to-day discussions that we are engaged in all the time. Book a call below. If you don't want to, you don't have to. Hey, I'm glad to have you as audience. It's not for everyone. Trading is not for everyone. But these are the unique times. This is reset season, guys. It's happening. You know, it moves like a glacier until it doesn't. And then suddenly things start going a little bit wrong. They're going to try to put the genie back in the bottle, and I think you get a little bit of a pullback from these impulsive moves. Might get a little bit of a relative high 3 and a little rollover for a little bit, and then we're going to be off motoring. Right now, this is the fun. Not so much crypto. Crypto, a couple of alts minor short. Done well on that with Bitcoin easing back. Don't particularly want to short Bitcoin, but I'm expecting it to ease back, possibly to other levels. FX emerging is the game right now. And you could have been in sooner. It's beneficial to be in sooner. Entries matter. Entries matter. What else is going on? Well, we've got structure that we trade on the ruble as well. We've got it on most emergings that are tradable. You can see it here. I'll go back out to the monthly. This is a mega one, and we're expecting a moon shoot on the ruble. Those, as I say, that wanted to be early, could have been early. This is one that we expect. Probably you're going to run 100 on dollar. And you won't have too dissimilar structure on the euro, but the dollar is the one. The dollar milkshake theory is one I subscribe to in general. And I expect that the dollar denominated debt is going to work against these emerging FX companies. Not that the ruble so much has such a problem with that. The rand, we'll come to the rand, the Turkish lira certainly. The ruble has a problem with energy. Energy is the one. And we've been, as if you watch this channel, the big bear on oil. And what's been happening in oil? You know what's been happening in oil, but I'll show you anyway. Russia is an energy nation, if it is anything. Gas, oil, they even have uranium tails for the nuclear side, which was also partially killed when they did Fukushima. So they've been hit on every front of the oil. Now, oil and gas has been hit. No, just because gas is super low doesn't make it a buy, guys. Peak demand for the traditional energy is behind us. The Greta Green is the new world. That is how it's coming. Why do you think Tesla is rushing the way it does? Anyway, let's get out of that. We could drop down. You can see it on smaller time frames. You'll get our analysis on that if you're in the community. Grab the mini series, by the way, if you think you've got no money. By the way, these are rainmaker trades that you're getting here, that when they go, will go like a boss. These are things that, you know, for the benefit of investing in your learning, you will pay for many times over in a very short time frame when they come due. Anyway, I won't sell any further. You know what to do if you want to be part of it. What about the USD ZAR? USD ZAR. Let's talk about it. The rand. I'm not going to do the low time frame analysis. I do that with my community. But as you can see, also big move up, and it's taken out that relative high. We know what that means to us. We've done draws. This is a problem. It's a problem for South Africa. It is indeed a problem for South Africa. And they were rated after Goldman, you know them, second after the lira for weakness relative to debt and a number of other things. So it could get quite exciting and dramatic for the ZAR. Could lose value. If you are based in South Africa, get into, if you have to have fiat, dollar, and even euro, although they're both loathsome, gold will be coming back. That is actually the better investment if you can tie it up more out of fiat. And in time, Bitcoin will become the one, but first it needs to do what it needs to do, which is exactly what we expected it to do. And that's to ease off right now after making the $10,500. So anyway, you guys are FX, less on Bitcoin, more on FX. So the ZAR is also in that state where it is in a breakout state. A couple of other points I want to raise. So gentlemen, some quite esteemed gentlemen, worthy of a follow, but sometimes I just disagree with him plain out. It's Mr. Schuldenschuener, I think it's German. Japanese yen no longer a safe haven. Yen is decoupled from gold. Everything will decouple from gold. You can't compare fiat to gold. Long run, gold is the winner against fiat in my book Across the Hall. But the notion that the Japanese yen at the fiat level is not a haven, I disagreed with. I disagreed 4 days ago, and since that has happened, the market has come back to confirm exactly what I said. Don't believe it. An economic contraction on sales hike is a once-off. So Japan put up a sales tax, and as a result, everyone stopped buying. These guys are savers. They're not compulsive spenders. They're an aging demographic. They're mega savers. Everyone goes, but Japan's debt is over 200%. They're all saved and held by the Japanese pensioners themselves. They don't rely on external people to support their over-indebtedness, and they're probably the closest to telling the truth. The US dollar and America, if it included its unfunded liabilities to pensions, with a major pig in the python demographic in the boomers now all coming to retirement, in retirement and moving through retirement, and medical and all the aspects that go with it, pension, etc., have at Boston University's last guess in around about 16, only it's significantly worse now, over 600% debt to GDP. And they need external people to buy their debt and bond market to sustain that. So you tell me which one does better, and let me tell you, technically, every time we really crap in the bed, the yen outperforms the dollar. So as far as I'm concerned, technically this was just a minor hiccup. So let's have a look at that chart, what happened. Here's what he said when he said it. It was at this point here. The yen was losing value to the dollar, and we said, forget it, forget it. Yes, there was an ugly HVF with a very tight funneling period. That was what we'd call a retrospective draw. It made that target and it died. It's run that funnel. It's completely lower than at the point when he made that statement. That was 4 days ago. I was saying I didn't agree with him. And you can see now how the last few days have gone, and we're at new lows. So we reassert another free trade for you. So the dollar will be one of the strongest in the dollar milkshake. The yen will be stronger still in our view as this all unfolds. So if I take you back to the monthly, in fact, I'm going to take that little, let's put the eye on there. Massive shooting star. Massive shooting star after initial rejection. You had an attempt to go higher that was utterly rejected, and you have a massive shooting star for this month, and you have a few more days to go of this month, and I'm expecting that little green blob to turn red or doji. In other words, this is a proper, do you know what they call this? The Japanese candlesticks are amazing. You can do so much just with candlestick analysis, basic candlestick analysis on big time frames, guys, in terms of direction. I've literally called all the Bitcoin highs, the high one at 20K on shooting stars, the RH2 on shooting stars and rejection wicks, and the recent high on shooting stars and rejection wicks. Simple candlesticks with big time frames make real sense. And that is a huge rejection. So we've called for 88s to be run to the downside. 88, you're currently trading 108. That's a substantial call with the potential for overperformance on this fella. So I would love actually to be Japanese yen long against rand, peso, Brazilian real, Korean won, ruble, and all the others. You just don't get the pairs. So one of the things I will be doing is to match all my dollar longs, which I have already on try, etc., and all the rest of the gang, and we even took euro try, is to have very aggressive longs of yen against the dollar and the euro during the bedwetting season, which is not far off. This is it, guys. This is the FX. So this is commodities. Then let's talk about gold. Let's talk about gold. It is money. So it kind of goes in conjunction with the fiats a little bit, only it's real money, he cries. Give me real money. So gold has done exceptionally well. It has done exceptionally well, beautiful people. Yes, indeed, it's done so well. In fact, if I square out this little region here, I will have a Wacom next time. I'm on a bit of new kit there. That was actually a major first break in a new trend. We just ran the inverted head and shoulder target and a number of HVF targets, and you were in a rising wedge. Do you understand that? So it's allowed a rest, guys. Targets are targets because after you make them, you're not likely to carry on up. Otherwise, it wouldn't be a target and you would still be holding for more. That's what happens. So we actually we closed our leveraged trades on gold and silver as a result. Gold is the god market to silver, like Bitcoin is the god market to alts. Isn't that funny? I'm using crypto as this template for explaining precious metals. It should be the other way around. They've been around for absolute millennium. Anyway, so gold is the boss, and they've got two sets of targets. Why do we have targets? Because they matter. Because it's time for it to rest, and that is certainly the case. And in fact, we cleared out. We're at a key moment, and I did look. It's a rounded bottom. It's either going to push higher, which is what I shared on a tweet. It's either going to push higher, or it's going to have a problem and it's going to fail. If it fails, then we reverse and we go short on the euro, which is exactly what we did. So the euro has performed even better, and there's been such a moon shoot it needed a rest. So we look at the euro. You're only getting the big time draws at the moment, guys. If you want all the detail and the minutiae and where the trades are, you're going to need to pop into the community, as I mentioned. So here you go. This is the euro. This particular breakout has been absolutely epic. By the way, you had new all-time highs for gold against the euro. There she blows, you know. That was your trade. You should have got long way down here. We've got a target for you. I've mentioned it in previous YouTubes. Go look and find it. And you've just made second interim on a number of trades. So what's happening? It's resting. Now, if you watch that on a weekly basis, let's go bi-weekly. I do so many cranky time periods. That is a shooting star on the bi-weekly basis. Take the lines away, and that is your shooting star, bud. It's entitled to a rest. So we actually took some money with a quick cheeky short when it was showing that it didn't have the design. Why short? I'll show you a short time frame trade that you could have been in that was highly profitable for us. Right here, right there. And you can see it there with a red line as the lines come back in. You could have been in it. You've got to be in it to win it. So you can own and invest in gold. You can buy gold, and you can trade it to the short side when it needs a rest. And that's okay. You know, you're not being unfaithful. You're not being unfair. Marry your wife, trade your flipping markets. Don't marry the markets and trade your wife. Although, I might be open to that as well. Who knows? Who knows what you might get as upside benefits. Anyway, jokes aside. XAUEUR. What else haven't I told you? So silver is a lagger. He's still lagging. Was a little bit heavy on longs on the silver, and the gold was continually being the lead. We haven't got to that point where silver takes over and goes absolutely freaking mental. We haven't got to that point. It will come. It will come. But that tells us we're not quite there yet. We're in a bull market for gold, and we're in a basing and beginning bull market for silver, but it's still lagging. Go and look at that same trade that I was mentioning on the euro. You made a marginally lower low, but look at that spill. Higher beta. This is like trying to, you know, this is like an alt, a shitcoin versus a Bitcoin. And once again, I'm using the crypto analysis for many of you that might also be engaged in there. But in actual fact, these are the boss markets. So it is underperforming. That's why you look at your gold-silver ratio. And if you look at the gold-silver ratio, you're back in. You're back in and up and going upwards. But this is a blow-off move. It can and will at some point end, I suspect. It's a blow-off upward move in the gold-silver ratio, guys. It's going higher and higher, and it's blow-off. All things often end in a blow-off move. Look at that. Look at that go. Look at that go. Look at that go. Look at that go. Even on the big time frame, look at it go. And you are now at, you've touched almost, what was the high point? You didn't quite get 96. But you got a high of 95.5. Let's pull that through on the monthly. We are in a huge rising wedge generally in terms of this. So you catch, oh, there was drawings already. I didn't need to do all that. That's great news. So there was a huge rising wedge, essentially, that you've been in since the bedwet of 2008, which saw the end of that high, and the collapse during that period all the way down to the bull market highs for metals of April 2011. Now you're actually significantly higher than the 2008 high. It touched on a wick, a shooting star wick, once again, candlestick, giving you the news before the news on what was likely to come, real exhaustion, and you got a rally afterwards. You could have shorted into that candle and had a stop up top there. You got down, you got a little inverted HVF on the top of this wedge structure, and down. Now you could have traded that by being aggressively long silver during that period. So we are now bouncing up to the top end of this wedge. We've only just wicked out of it, and then ghost of a close out of it here. We've wicked just about at it, How far have you got to go before we start coming back down into that? That'll mean silver will have to start getting going at some point. So part of the second stage of this emerging market crisis, we may get a bit of a rest now and then pausing. You will get chances to get in on those FX emergings against dollar, particularly my take, do it against yen where possible, else get a euro and a USD yen short at a key technical moment to give you additional juice whilst the dollar gains against the emergings, the yen will gain further. You can do it with 2 trades by being short USD JPY, long the dollar against the emergings. And in the same time, you can start to get ready to overweight silver, but first we need gold to come back up again. We need these shooting stars resting. We need them rest. It's going to go quiet. Gold needs to come out of the news a little bit, and then it will start going again. Wait for gold to lead, but once silver starts playing catch up, increase your weightings. That's the nature of the game. Guys, there's enough in here for you to have a number of rainmaker trades if you execute correctly. We will see those that execute correctly and really want to learn in the community later for sharing this with you. This is key moment. This is part of the reset process. You are watching economic history being made and how it unravels in financial markets. The absurdity of our current fiat debt-based system will come to an end. They will wrap it up in some narrative around some manufactured virus or not manufactured virus. Who knows, to mask it as not their fault. Another black swan from out of the blue that no one could have foreseen, where everyone got sick, and of course it hit the economies and therefore it broke everything. Nothing to do with everything they did before regarding building an usury extracting machine, putting you, the Zionists, putting you behind a compound interest equation all the time that saw you having to work and pay interest, etc., and live, and devaluing your currency and passing on taxation onto you by devaluing your currency all the time and dragging you into higher marginal tax. Nothing about that will ever be mentioned. Anyway, less of the Reset Sniper talk. This is what's going down. This is gold, silver, and this was your FX emergings. Here are your trade opportunities. Beautiful people, go ahead and take him. Do not bother. Be focused. Do not bother so much with the narrative around the Dow Jones. They may well pump it back up. Can I just say to you, by the way, that there was a massive rising wedge that we have warned of numerous times that needed to die. Of course it popped out the top. Of course it then had a die. The problem is determining when that was going to happen. There's your wedge. There's your break. That's your equity narrative. It could do a pullback. How far does it go? I don't know. The truth is, I don't know. I'd have to look at the smaller technical timeframes. I might look at it, but the FX emergings and the rest of the trades are far more interesting. So slightly less now on crypto, slightly less now on indices, everything on the FX markets. These are the big badass markets. I'll show you one other thing before I call time. We also gave you this high yield growth junk bonds basically, and I've continued to assert that this should be a downside break for you, by the way, and we gave you this trade, whether you take it or not, or took it or not. When we gave it to you, we said it should not run that secondary high. You should be a shorter before that, and there was a grind line in there for you to potentially take it. That once this gets, and look at that, that's a rejection candle, guys. This has been getting low volatility for a while. This has been getting low volatility for a while. Little final pop up there, and then boom, up she went and then rejected. That's what, look one way, go the other way candle. We teach you about specific candles which we consider highly significant in our course. We don't do every single one, but we definitely show you hammers, for example, shooting stars, and look one way, go the other. We talk about it in detail, and you can learn all of that. These are not to be ignored events. That is a significant event. Of course, you can throw your volume on and you can see whether that's backed. That significance is backed by volume, and you can try explain it away and say, but the coronavirus made it happen. It doesn't matter. The difference between analyzing fundamentally and technically is you analyze technically. That's it. You understand the story separately. Volume means there's volume. That is a key reversal event. Can I just show you? That is the highest volume since you last reversed up down here. This is a reversal, but it ain't a reversal up, guys. You've been given this damn trade. If you don't put it on, it's available on CMC spread bets. It's on a lot of them. My premium community have given all the detail, and a number of them are wearing this one, and that's your opportunity. This is a failure. This is a failure to an extreme level. You can get the targets and the stops. If you like high reward, low risk trading, this is your game. This is a shelf, by the way. If you want fundamental narrative as a separate assessment, let me just say it to you. There is a shelf of shit debt just above junk status, including megacorps like General Electric, that all should be downrated already, that will all drop into junk. And when that happens, every pension fund that has a mandate not to hold any junk investments because they are saving for the little grannies will have to unload that pile of crap into the junk bond market. Guess what? The junk bond market, Mike Milken, go check YouTube's I did about him. He was the creator of this. This is what's called high yield. It's a nice way of saying junk or crap, where you get paid a bit more interest for likely businesses to fail. You will have an absolute huge balloon, pig in the python of new supply dropping into a relatively small market compared to the high quality debt markets of corporates, and you're going to have such a huge supply, they're going to get buried in it. Pension funds should be selling all those debts just above junk for the future downgrade. They should be doing it right now. You're going to have an economic slowdown as a result of all of this narrative with the coronavirus, true or untrue. An economic effect cannot be argued about. The economic effect of everyone shutting down, the supply, the sales, the ability to provide product to be purchased cannot be denied. And if you like fundamental narrative, that's your fundamental narrative. But the technicals have been setting up for a long time, long before this virus in December showed its face. And we've been talking about it, and we YouTubed it long before. This is what you see. So what have you learned from me? Well, you've learned a few things. Crap debt is going to fall through the floor. You might think that's obvious, but it's about the timing and the technicals and getting the stop and the target. Everything is obvious in hindsight. You just had to look one way, go the other way candle. It's going down right now in front of you. Reset is begun happening. Reset is not a single event on a single day. It's a process of a whole bunch of shoes dropping. And suddenly you realize that this glacier has moved a whole bunch, and it's no longer a glacier. It's a block of ice falling out of a top of building. And as I've said, you don't get to get that Ford Bronco back up the hill once the handbrake's off and it's careering down the mountain. It just don't happen. Okay, so I'll show you one more thing in this final clip. Crude oil, I said to you, it's down, stay out of oil. We told you, short PAA from $25, where's it now? It traded $13, just made an interim, it may rally, you may be able to get in it. We've said oil, key point here, this has got, we've given you a single dollar, sub 10, single dollar price potential. That doesn't mean it's absolutely going to happen, but we're saying it's far higher probability than most people are pricing in. A single dollar price for oil, in sub 10 price potential for oil. And even if it doesn't happen, it's going to fall a long way. We have geometric targets. You've heard it here, and if you follow me on Twitter, you've heard that I've been saying this for a long time. We've been short oil and oil services company. You can also go short Norwegian kroner, not an emerging one, but an idea that you can see. Go look how it's performed against the dollar and the euro. That thing is losing value. It's a social welfare state built on an oil field. Guess why the Saudis are trying to get into everything else under the sun and unloading all their huge bequests, multi-trillion cap oil fields onto their citizenry. They need a bag holder for the change in the cycle, which is ending the petrodollar, and they will have their new green version that they will be enforcing on you. So you've seen it all here, guys. Dollar to go, the oil price to trade down. You can get the specifics of the trade and the inverted HVF that we've drawn in the premium community. Okay, the final thing, Scandinavian Capital Markets, 1 into 100. I've been able to leverage up great trading peso, trading Tri, trading all of them. The links below. I love the platform. I will never shill or put anything forward that I don't use and enjoy and utilize myself. I am adding more capital to that platform. I'm enjoying doing it. The link is below if you want to take a part of it. Guys from the US, if you want to flag your interest to us, you can. So the US guys will have to be grouped together as a whole, and via an intermediary you can get access to it. But otherwise, just on your own, it won't be possible. because your country doesn't want you to make money. They want to tax you everywhere you are in the world, and they're making their own rules up that makes it a nightmare for companies to deal with American citizens. That's the reason why. But there are ways around it. So you can notify us. You can email support@themarketsniper, and when we've got a critical scale, that intermediary will take a job lot of you together with a few details that'll be explained. Okay, I'm the Market Sniper. We are having a great run. We're enjoying it, but we stay humble. The market can humble you just when you're feeling all plucky. There will be pullbacks, and we're here to keep you grounded as well as make you successful. And join the community if you feel it. Otherwise, don't just watch and in trade, get your viewpoint. But remember this, it's non-advisory. We can always be wrong. We have been wrong, and it's all good. Okay, catch you later, and over and out.